Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 22nd of November, and we had a little bit of consolidation slash pullback this week here, but no damage done. The worst group was the semiconductors. We'll take a look at that, and they give us a little bit of reason for caution going into next week, and we have a holiday shortened week, of course, because of Thanksgiving. I wanted to quickly remind people that I try not to be obnoxious about making sales and talking about Alpha Trend subscription product, but I do have a subscription service. I have it on sale right now through the end of Sunday. It's typically $799 per month, per year rather, and now it's $599. So if you've been considering taking advantage of a subscription at Alpha Trends, then now's the time to do it. Let's take a look at this market. The S&P still holds above this month-to-date volume-weighted average price. That's not a coincidence. There's programs based around that. One thing that gives me a little bit of caution going into next week is that we're below the declining 5-day moving average. I don't think it's time to be bearish. I think it's time to be cautious. There's a big difference. We might experience a little bit, deeper pullback, and if we're going to break down, it might look something like this, and then we would look to the bigger time frame to see, where we had the potential to go. And we have a rising 20-day moving average right here. I'm not looking for anything that suggests a top or anything like that. We're in a very strong uptrend. And again, maybe we tested the 20-day moving average. Who knows? The NASDAQ is in a very similar situation when we look at the 30-minute time frame. Maybe just a little bit, deeper, a little bit of underperformance rather, because we're, really hammering on that month-to-date volume-weighted average price. And like any level of support, the more times it's tested, the more likely it is to resolve, to the opposite side, meaning that more time it's tested, the more likely it is to fail to hold. So be aware of that. It just gives us a little bit of caution in the NASDAQ. It's not a reason to go out and short the market, I don't think. If you look at, the biggest stock on the planet, Apple, look at how it looks with its month-to-date volume-weighted average price as well. It's also below the declining 5-day moving average. And in all these markets, what we're going to want to keep an eye on is the volume-weighted average price from the peak. So you can see that Apple, since it peaked just a couple days ago, and this is the near term, I'm not calling a top on it. I'm not saying it's the peak. I'm saying the near-term peak. But as pressure builds, it increases the chance of a little bit deeper sell-off. This stock, Apple, has been holding above that rising 20-day moving average on a closing basis since late August, and a little bit of pullback would not be a negative thing. It would be good to refresh the market. So back to the S&P 500, let's just keep an eye on, again, the volume-weighted average price from the peak and that declining 5-day moving average. The Russell 2000 has been kind of a disappointment. It really felt like it was going to try to get going and outperform and take the torch in terms of finding leadership. The weekly time frame, it's set to continue to go. It's we had it. I'm not sure if this was an inside week, but we had a tight consolidation, so it still holds up. But it would have been nice to see it take the reins this week. Instead, maybe we've got to wait a little bit longer. Let me just go back to that daily time frame for a moment. I don't mean to flip back and forth so much, but we see that this prior resistance is holding a support in this general area. That's where we see the rising 20-day moving average as well. So the Russell 2000, it's stuck below the declining 5-day moving average. I think as long as it can hold above 157, we still want to see that this market give it the opportunity to break out and lead the market higher, but the evidence just is not there yet. So you can be early, but it can be costly to be early in case the market doesn't participate and do what we want it to do. So I'd rather wait for strength to purchase. And again, the semiconductors, they've broken this little pattern of higher highs and higher lows on the daily time frame. But again, that doesn't mean we're in a downtrend. It's just a broken pattern. It's just it does it's not something to read into. We still have a rising 20 and 50-day moving average. This market has had a phenomenal run. Again, it's up 50% year to date, even with a 2% loss this week. So you can't overreact. But we can maybe see that the semis have been the leader. They start to break down a little bit. I can tell you that it's been more difficult to find the low risk, high probability swing trade setups the last day or two. But that's healthy for the market. The market is telling us that it's time to take your foot off the gas. Let the market absorb these gains a little bit and see how much damage gets done. If you want to be aggressive and try to pick tops, that's a different story. That's not the game I try to play. I want to participate in the trend, and when the market tells us different messages on shorter term time frames, it means stand aside. It doesn't mean sell short, not when we're in a primary uptrend, unless you're a super aggressive trader. The biotechs continue to run here, and I've been talking to the Alpha Trend subscribers saying that what I think a likely scenario is that we do continue to run as we have. I've been saying that this week, probably up slightly through this prior peak, and then as it gets that so-called breakout, and I say a so-called breakout because realistically, come on, I mean, do you really think this is a buyable breakout that's just going to continue to run? You have to ask, where has it come from? We were just at 96, 97 at the beginning of this month, and now here we are, 18% higher, and had every one of these weeks higher highs and higher lows. Over to the daily time frame, again, we're getting extended here. There's no sign that it's time to sell or sell short. I think, again, that the likely scenario is we break out above there and then begin the pullback as the breakout buyers or maybe the last shorts get squeezed. It's just foolish to buy up there, is my opinion. It doesn't mean you cannot make money. It just means the odds aren't as great. And we want, trading and investing is about probabilities, getting them in your favor. Financials holding up really well here. This group looks like it's consolidating in a tight range. And if you look at the 30-minute time frame here, we are testing that volume weighted average price for the month. It hasn't been as strong here as some of the other markets, but when you look at some of the stocks like Citi, we can see here that Citigroup holding in a tight range, looking like it's getting ready to go. Bank of America looks similar as well. So, the banks are healthy. That bodes well for the S&P 500. The semis are undergoing a little bit of pressure. That might weigh on the NASDAQ. But, next week we have what's typically a strong week. So let's see what the market gives us. Keep an open mind, and remember that risk management is always job number one. Thanks for tuning in.